New Zealand dollar versus US dollar. Breakout and retest. Now, when we're looking at the breakout and retest, it's way simple and easy to understand. We have to mark areas. The market is simple to understand. We have a time frame of 5 minutes here, M5 or 5 minutes. Now, the M5 is way simple to understand. When we look at this area as the market moves or trending up, it will be breaking higher price, higher price, higher price. Where is the higher price? This is the higher price. And where is another higher price? This is the higher price. And where is another higher price? This is where the higher price is. And now we can't have a higher price without a lower price. This is a lower price over here, and this is a lower price. Now this is a lower price. Now marking this lower price and higher price will not get you far, but you must understand structure, how the market works, or how this graph or this chart works, how to read it in a proper manner. Now we have another tutorial on how to read it as a whole under the technical analysis. When we look at the breakout and retest, we are looking for a specific area, which means the market can actually create a dot. Let's say dot. This dot, we can call this dot higher price. Are we together? This is our higher price. Now we can call this dot here, over here, below here, this is our lower price. Now this cannot be just moving in this direction, but we are just trying to make sure that we understand. We can move from this dot to here, from high to low, and we can just name our lower price our number 1. We can name our high price our number 2. And then from number 2, the graph or the chart will go down, and we don't know whether it's gonna end here or it's gonna end here or it will come back to the 1. What we know is that if right now it turns here and goes up on number, this is our number 1. Let's just let's say this is number 2. By the way, let's just use the number 2. It's fine. We can continue with number 2. Let's say this is the number 3, or we can just make it easier for someone who is actually might be confused. Let's say this is our number 1 also. This is 1 1, because we have a 1 movement going up, which is 1 1. Now this movement is number 2. Number 2, this is where the breakout will take place. If right now it continues to go up, right, continues to go up, it will create a turning point there. On this turning point, it will leave a higher price. Now when it leaves a higher price, these are the candlesticks. Some of you might not know what the candlestick is, and we have another tutorial on this channel. Now once it turns here, we have already marked this area using lines that are horizontal. Now when it comes back here, down here, we are waiting for it to bounce back going up, which means we're waiting for the candlestick chart to come here and bounce, go up. But then when it comes here in this area, this is the most important critical area whereby we'll be actually confirming whether it's a buy or sell, because it can also continue to this direction down. You will be actually losing if you actually go in with a buy, or you place buy limits or those orders of buy limits, sell stop, whatever. But if you're using those orders, you will be actually losing. You must use market execution, meaning that you'll be actually confirming entry using whatever confirmation that you have in your disposal. If you don't have any confirmation entry that or confirmation setup or tool or system, please, you can actually request for mentorship lessons or signals so that you can join my group and be able to learn and understand what you need to do. So in this area, this is the most critical area of breakout and retest. And when we look at here, this is the number 1. This is the one that we have over here. This is the one over here. We moved from this one all the way up to the one here, and we went down here. Now when we went up this time around, we made a break on the number 1 here, and now we made a retest here. Now when we made a retest, we had already marked the area. Now when we look closer here, we have what we call an engulfing. Engulfing is a candlestick pattern that is like this, which means this red candlestick that actually going up will engulf the green candlestick that is actually going down like this way, in this way. So where do we buy? We buy here in this area, which means we can just place our 0.01 here with the buy. And where do we set a stop loss? We set a stop loss based on what? Based on the structure. We can just set a stop loss here, which is an SL down below here. Maybe let's say in this case we are risking $3, given that we're risking 300 points, right? We are risking 300 points. Now, when we look at this risk here, below the structure, we can use the structure, which means we can place a stop loss below this candlesticks, below this candlestick, or below this candlestick. But that's not guaranteed. That's not something that we can rely on. We have to rely on something that we actually have an information about. Let's say in this case, we place a stop loss here, they come and stop us out, which means we lost the trade, but it will continue to its direction, or the direction that we predicted, or the direction that we've analyzed. That is actually bad, really, really bad. So what we really need, we need this to make sure that setting a stop loss here, we have backtested the breakout and retest. We have backtested the breakout and retest in many market conditions, or we have used the NZD, dollar to backtest this data. When you backtest this data, we are actually learning how to use or how to apply a breakout and retest, and also what do we expect in terms of the number of points the market can move, or this graph can move in a given possibility. That if right now we find maybe, let's say, 30 possibilities of what's happening here, we must be expecting that if right now out of 30 the risk was 300 points, which means now that's actually our standard stop loss that we must set. We're not using a structure like this, but if the structure allows and we found that we had 300 points in the structure that happened in the possibility of 300 points, we have to actually let go of what's actually happening here. So let's make sure we stick to what's happening here. The breakout can also happen going to the downside. This is actually the example of when it's actually going to the upside. So now, where do we take profit? We take profit on the next level area where we actually had another expectation where we have to sell. So in this case, it moved up here, creating a higher price, and it came down, and this is an area where we're expecting to get out. We can get out using this area over here, but that's actually gonna give you less profit, given that you're using a smaller time frame such as M5. So it is best for you to actually hold the trades until it gives you another reasonable structure or area or condition where you expect to make a sell, or where traders are expecting to make a sell over here. So now, when we look at the expectation of making a sell over here, we had another breakout. The breakout only happens because of the candlestick close above this marked area of a resistance, and this area is actually an area where liquidity, or where orders are placed, buy limits, sell limits, where actually set this order. So now the retest happened here, and which means now it could continue to go to that direction. So taking a take profit, we can take profit here, or you can use what I call also a high of the day, a low of the day. And this is important. And how do you see the low of the day? You see the low of the day and half the day based on what? Based on that, we can just use this one and go to this is gold, by the way. Just go to, let's say, 15 minute, and 15 minute we can just make a sell over here, because gold is selling. Now when we make a sell here on gold, here, we are expecting to take a profit here on the open of the day, which means it's the low of the day. And when we just go to code section here, we can see the price of the low of the day and high of the day. So meaning that whatever that we do here, if right now we take many trades as possible here for sell, we're expecting to take profit here. We are expecting to take profit at the low of the day. How we see the low of the day? We see the low of the day because of using what the period separator, separating the days. This is 21 April. If you scroll down like this, you can see this was the weekend here, but some of you might not know what's happening yet. But during the weekend, the market is closed, especially the currencies, they are closed. So this is the 17th of April, which was Friday. Now it opened on Monday. Great, it does what the higher price of the day, it has to go down, and this is actually what's happening at the moment, and we've made a sell. So now when we actually have to set a stop loss, we have to set a stop loss based on the number of points that we're actually risking. So if in this case I tapped here and I see this icon over here, I tap on it, and we see we have risking only $1,000, which is too much risk. So we can just lower the risk to at least 200 points. Not risking based on the structure. If you're risking based on the structure, you'll be risking, the risk will be dynamic. The risk will be dynamic. So you need to fix the risk. You can use a dynamic one with no issue, but then you must know if right now your dynamic risk is appropriate or proper, you have backtested it. Backtesting is very important to trade or use in the market. So right now we can just close here. We've managed to make enough profit that is actually reasonable, because the risk here already is too much, so we can just restart. Let's go to 5 minutes. You can see this is a very nice movement that is going down, and it's actually important for us to understand the time frame also. If we tap here, we can take a look here. You can see this is the time frame that we use. So what time frame should you use for breakout and retest? You can use 4 hours, you can use 15 minutes. So if right now we use 15 minutes, you can see in the morning here on gold what gold did here. This is our number one area. That's an area where the market moved from here to the upside, which means created a high price, made a point here and broke this level, and this is the area where we made a buy in the morning and taking a profit over here. So for a sell, it's the very same thing that actually happens. So if right now we look at another example that maybe we can actually use for you to see. I'm not sure if we are still having some difficulties in actually understanding the breakout and retest, which is quite simple. But the most important part is understanding the break and retest as to which time frame to use, and managing risk. It's important. It's important managing risk. So I trust you will actually have an understanding and you won't have any difficulties. And let's look at this one. And maybe let's look at this example before we actually end our lessons. You can see this one here. We can mark this area. You can see this market. The market was moving in this way, and then from here on this area we had a lower price, so meaning that it broke. We are expecting for it to come back and go into that direction. So that's all. I love you all. Stay blessed, and I'll see you another lesson.